Hi, this is Shupriya from shupriyapanda.com, and today we are going to continue with the RBI Grade B Interview Preparation series. Let's jump in. So the first question that we are going to tackle today is the difference between the repo rate and the term repo. Now I will make a separate video explaining the term repo in detail, so you don't need to get too much deep into this right now. I'll just tell you the main difference, which is that the repo rate, it's the rate at which RBI lends, right? And this repo rate, it's always overnight. So the money that you borrow today, you have to return it to the RBI tomorrow. But term repo, it's different because it has a larger tenor. So it can be 7-day term repo, 14-day term repo, etc., etc. So anything which has a term greater than overnight can be termed as a term repo. Okay, so that's it, and I'll make a separate video explaining the entire thing about the term repo, and we'll jump deep into the vagaries of the term repo at that point of time. So let's go on with the next question. So the next question is the 4 important announcements of housing made in the budget. Now these types of questions are often asked by the RBI interview panel because they want to understand whether you have studied about the budget in detail. So they might ask you questions like, what were the important healthcare announcements in the budget? What were the important educational announcements? What were the important infrastructure announcement, housing announcements, etc., etc. So like that, we can cover the entire gamut of the budget, but we also need to go into the various aspects, the various particulars of the different sectors and sector-wise allocations. So the budget for this year is yet to come out. Once it comes out, I'll make an in-depth video about it. So we don't have to go into the question right now. Just make a note of it that these types of questions are often asked by RBI. So we need to prepare these things. So sector-wise and targeted things are often asked. Moving on to the next thing. So what is a unicorn? Now this is a very important question in today's terms because startups and startup valuations and everything regarding the startup world is being discussed in depth because of various kinds of things that are happening out in the world. So a unicorn is basically a startup which has a net worth of $1 billion or more. Now unicorns have been seen in many different countries as of now and in various different sectors as well. So the panel might ask you regarding which are the Indian unicorns, and if you get a question like this, you can answer with Oyo Rooms, there is Zomato, there is Swiggy, and there are various other kinds of companies which have gotten the unicorn status in India, and you can go and just check it out because there are various kinds of industries which have been impacted recently, and the startup sector is doing pretty well in India. And if they ask you the same question for foreign unicorns, so you can say they are Uber, DD Choosing, DJI, SpaceX, Airbnb, etc. So DJI has come into prominence recently because it's a drone manufacturer, and SpaceX is also something that is discussed quite a lot because of Elon Musk's plan to go to Mars. And there are various other kinds of startups which have achieved this mark. So the most number of unicorns are mainly in China and USA. However, India is a close third. So keep in mind that information as well. Moving on to the next question. So it's the difference between crowdfunding and P2P lending. Now, both of these terms are very important because RBI has recently made guidelines regarding P2P lending, and they are also thinking of making guidelines about crowdfunding, and all of these things were actually operating outside the ambit of the RBI, but they want to bring all of these things under regulations. So what is the main difference between crowdfunding and P2P lending? So in crowdfunding, in return for the money that you get, you can give equity. So you do not need to have any monthly repayments. So for example, if I need 10 lakhs for my business, I can go to a crowdfunding portal and I can ask for it. So the person on the other end can give me the money, and in return, I can sell him 10%, 20% or 30% of my company. Like that it works. So you can give equity and you don't need to give any kind of monetary benefit immediately. So that's crowdfunding. And the difference between P2P and crowdfunding is that in P2P, you have to have monthly interest repayments. So you cannot have any P2P lending which is dealing with only equity distributions. So monthly interest repayments are mandatory in P2P. And there are many NBFCs which have recently gotten the P2P, NBFC P2P license by the RBI as well. We'll get into that as well. So moving on to the next question. This question deals with some Indian P2P firms. Now, one of the most important companies in the P2P segment in India is Faircent, and Faircent was the first to get the certificate of registration as an NBFC P2P by the RBI. So it is a very important name to remember, and the panel might ask you regarding Faircent. So just read a little bit about it. Another important firm is I2I Lending. They are also dealing with P2P things, and a new firm which has risen up recently is Lendbox. So Lendbox is also a P2P firm. So if they ask for any examples of P2P firms, you can tell these three names. Moving on to the next question. Name some Indian crowdfunding firms. Now, when we come to the names for the Indian crowdfunding firms, some of them, some people actually say that Faircent is one of the crowdfunding platforms. However, this is not accurate because Faircent is strictly a P2P and it has gotten an NBFC P2P license. It has not acquired any kind of crowdfunding license, although some people might say that it's a crowdfunding platform. However, I would say that you should name these two firms, Milap and Keto. So these two firms are Indian crowdfunding firms, and they are especially geared towards crowdfunding business, and Faircent is definitely not one of them. So coming on to the next question, name some Indian ARCs. Now, ARC means the Asset Reconstruction Company. Now, what is an ARC? An ARC is basically an institution that buys bad loans from the financial services companies or the banks, and they try and recover as much value as they can out of it. So for example, what happens in this kind of business is that the banks will be approaching the ARCs. So for example, there is a 100 crore loan on the books of the bank, and the bank is unable to recover its dues. So instead of pursuing that 100 crore loan, it decides that I can take a haircut and I can sell this loan for about 50 crores to an ARC. Now what the ARC will do is try to recover the value that is there. So it might try to sell assets, or it might try to gain hold of the promoters and acquire the money. So they will try to acquire as much as possible, and what happens is they are well versed in this business. The bank is not well versed in this business, so they try and get a profit out of this transaction. So it happens to help the bank as well, and it helps the ARCs also to make a decent profit. Now this is a system which has gotten a lot of traction in international shores. However, in India, ARCs have not performed that well. So if they ask for any examples of ARCs, you can say Edelweiss ARC. It's the largest ARC operating in India right now. You can also name ARCIL. It's also one of the prominent ARCs. And a third name that you must remember is KKR and Company. So this is India's first foreign owned ARC. So it's quite important to remember that name. Now let's move on to the next question. So what is a reward-based crowdfunding? So reward-based crowdfunding is basically any kind of crowdfunding platform that does not have an equivalent financial exchange. So for example, what happens in a place like Kickstarter? So Kickstarter, they raise funds, right? However, the people who are helping to raise that fund, they are not getting any kind of financial benefit. So what they get is usually a rewards benefit. So if I am launching a new product and I am getting the money from it from a campaign on Kickstarter, I will give the people who have donated me some exclusive content, some branded merchandise, etc., etc. These are the things that we give on Kickstarter. However, Kickstarter does not allow the members who are donating to directly get a financial or a monetary benefit. And how does Kickstarter actually make money? So it takes a 5% cut from all the money that is sourced on the portal. So you understand, it's a little bit different from the traditional crowdsourcing or the traditional P2P lending as well. So this is about reward-based crowdfunding. And the next question is very important for bankers. So every banker and every finance guy will be asked this question, and it is, what is your bank's CD ratio? So CD ratio refers to the credit deposit ratio. So it is basically the amount of loans that your branch or bank has divided by the total number of deposits that your branch or your bank has. So it's quite important to note down your branch's CD ratio if you're a banker or if you work in any financial services company. And if you are a banker, you also need to know the bank's CD ratio, the bank that you work in, and you can easily get this information from the annual report or from the balance sheet that they present every year. So keep a note of this question because it's often asked to all of the bankers out there. Now let's move on to the next question, which is what is AUCA and INCA? Now these are two extremely important terms. AUCA stands for Assets Under Collection Account and INCA stands for Interest Not Collected Account. Now, I'll just explain you what these things are. Basically, when a loan goes bad and it is identified as a loss asset and the recovery is not possible, or there are talks of the recovery, but it's not going on right now. So what we have to do is we have to take the loss on the books of the bank. So we have to charge the loss to the profit and loss account. Now, imagine what would happen if all of these bad loans are immediately charged to the PL. Then the bank will be suffering a lot of loss, right? So what the bank does, this is an accounting strategy that is legally fine and it is always allowed, which is they keep all those bad and those doubtful assets in an AUCA account. What happens is that, for example, if you are having any talks with the promoter or with the company that they'll be recovering the amount and they will be giving it back to the bank. So these kinds of accounts, which are still in the discussion phase, but they must be written off, those accounts are put into AUCA. So you get a little bit more time to recover the accounts, the money from those accounts, and then you can just neutralize those AUCAs. So it's very important for every branch, every bank branch to keep a note of the amount of AUCA, because that is the potential amount that the branch manager can go ahead and recover. So it's quite important and it's a very important question as well. And for INCA, INCA is basically the interest not collected account. Now what happens is when a loan goes bad, the interest that is charged on that loan, you cannot usually recover it, right? Because the principal itself you are unable to recover. So what you do is that the interest that has been charged to this account, you can debit that account and credit it into a INCA account. So in that INCA account, all this unrecoverable interest is put down. So it's just another accounting strategy, and this is mainly the main difference between these two. If you have any questions, put them down in the comments below and I'll help you clarify regarding any concepts that you have missed in this. So moving on to the next question, we have what is a currency swap agreement? Now this is an extremely important thing because just last year there was talk of a $75 billion currency swap agreement that India and Japan had signed. Now what happens in a currency swap? So it's basically a line of credit, you can say. When the two countries are signing a currency swap agreement, it means that they can freely borrow in each other's currencies. So if we have a currency swap agreement with Japan, then we can borrow in yens and they can borrow in rupee. So what happens is there are a lot of forex fluctuations that happen, and sometimes our country might be needing a lot of forex reserves to neutralize those effects. So what we can do is we can directly get a yen loan from Japan at a lower rate, and it can help us manage our forex better. It's very important in this bilateral scenario. And what happens is if you have a currency swap agreement, you can borrow at LIBOR, which is the London Interbank Offered Rate. And you don't have to pay a lot of interest because it is just the standard LIBOR on which you are drawing that money. So as I mentioned, last year there was a $75 billion agreement with Japan regarding this. And this is something that is quite important even for companies, because companies also have currency swap agreements so that they can easily borrow. So an Indian company might have a currency swap agreement with a European company so that they can easily borrow euros, and so on and so forth. So you understand the concept, and if you need any detailed explanations about it, feel free to write down in the comments and I'll just make a different video about it. So let's move on to the final question, which is the 3 different types of risks as per Basel II. Now Basel I, Basel II and Basel III, these 3 things are extremely important to cover. So what are the 3 types of risks as per Basel II? They are credit risk, market risk and operational risk. So you have to understand all the pillars of the Basel I, Basel II and Basel III, and also study a little bit about these risks in detail. So I'll cover it in the next videos. And if you have any other doubts regarding anything that I have explained in this video, feel free to reach me at the comments below, and I'll see you in the next video. Bye bye.